What's up, guys? It's BGFX. I'm coming at y'all with another brand new video, man. I hope you guys are all doing good. As usual, if you do get some value from this video, make sure to hit the subscribe button down below, as well as leave a like. That is much appreciated, man. So let's go ahead and get to this video. I'm gonna be walking y'all through a trade that we took on USD CAD. Aside from that, I also have a few different methods. I got some special things going on for y'all right here on this chart. I'm gonna be walking y'all through because y'all seem to really like the institutional and market maker concept, so that's what I'm gonna be getting into in this video. But back to the USD CAD trade, that's what I'm gonna go through first. I'm gonna throw my entry up on the screen right now for USD CAD. This trade set up personally, you know, we hit take profits 1. Now usually when I get to TP1, I'll move my stop loss to break even. However, in this case, I did not move my stops to break even, and I'm gonna walk y'all through kind of why I decided not to once we get a little bit more into the video, and why, you know, me not moving my stops to break even cost me $1,700 in a loss on this trade. But you know, it's totally fine. All about learning from it. Like I said, man, purpose of this YouTube channel is to document the journey, document the ups and downs of it, and not only me learn from my mistakes, but me document it and put it out there so you guys can learn from my mistakes and, you know, get better and kind of catch some wisdom off of kind of my mistakes here, or profits. So mistakes and gains, you know, you can learn from everything. But yeah, man, USD CAD, I'm gonna work my way down to the lower time frame. But first thing I did, you know, to find a potential entry on this pair was I took my Fibonacci down from this low, I brought it up to this high, and I seen that we rejected off of the 0.5 level. So you can see that we kind of had like an indecision candle. We pushed up, made new highs relative to this previous area, then we made a new low. So if I was to come back down, and I'll go ahead and take my Fibonacci off, but if I was to come back down to the 15-minute time frame, which is where I was actually looking to take this trade, you can see that for the most part, price pushed to the upside. You know, we had a decent extension for the upside on USD CAD, and you know, we broke this level of structure. We formed this high. This is a sell I was looking for last week, and then we pushed all the way down to this lows, and now we were sitting at the 50% retracement level. So this was also kind of middle of the week type of thing. So for you guys who aren't familiar with what we call a midweek reversal, basically anyone who kind of dives into the market maker concept, the theory of a midweek reversal is that it's very often, it doesn't just happen midweek. You know, a lot of times it'll happen on Wednesdays and Thursdays, but it can even happen on a Monday. It's basically an unexpected reversal in the market designed to shift most retail traders and kind of eat up their liquidity and eat up their positions, even if it's for the short term or maybe even the long term. So that's what I'm kind of going to show y'all in a little bit. I got it right here. It says that a midweek reversal can happen any day of the trading week, and it is a reversal of the dominant weekly trend after 3 levels of rise or fall. For example, once smart money have accumulated a weekly bull trend cycle over the course of 2 or 3 days, the midweek reversal will change the direction to a bear weekly cycle. The reverse is not guaranteed and is dependent on smart money's fundamental outlook of the particular currency pair. So this is something I talk about in my previous videos. Like, a lot of these short-term outcomes are based off of liquidity and based off, you know, the overall sentiment of the retail market. Because when you got sellers coming in, selling, you know, a lot of times we're going to see something like this happen. So if we identify this low and we measure this, we can see that this was about 7 days of consistent upside movement. Now, of course, every now and then you're going to have a pullback like that, but that's in any market condition. Even if we come back here and we look at UCAD, you can see that for the most part, you know, we have been consistently moving down. We eventually found this bottom and had a decent push to the upside, and then we, you know, came above these highs. We failed to hold around that level, but we did get a potential buy here. However, we did hit the first take profit, but we did get stopped out. So let me explain to y'all my concept of why I actually want to go long here. So for the first part, right, I went ahead and I drew this, and then I'm also going to go ahead and take this off. Then I kind of drew this bottom level as well. So around this point, you know, we had a little bit of consolidation. We didn't really have a breakout until we finally came below this level, and this was actually an institutional candle on a different time frame. I believe the 30-minute time frame, this was a solid institutional. Somewhat like that. You can see we had that bullish engulfing, then this buyer volume came in and took out these previous levels of structure, even broke up and made a new high. So it isn't like price, you know, pushed up and held above this level and began to trade back up. It was more of just that spike to the upside. It's something as simple as that can be a confirmation that you are in the expansion phase. So back to what I said in previous videos, we have a contraction, we have expansion, and then we have the follow through. Now in the middle of that, you're going to have a lot of things occur, and the way you respond to it is basically what happens, you know, next. So if we see right here, we had this fake out of both sides. Basically what I did was I took my Fibonacci and I brought it from this low all the way up to this high, and I entered on the 0.5 level. Right, I entered on the 0.5 zone. My stop loss was very tight at 13 pips. Now I know a few people might be watching this and they might be wondering to themselves, you know, why is the stop loss 11 pips, bro? There's no wonder you got stopped out. 11 pip stop loss. Well, the reason I did that is because my outlook of this trade was that this right here, this what I call institutional candle, was a liquidity grab. Right, so in my opinion, this movement here was going to be the low of the day. So I have this indicator. This is the high and low of the day. For anyone who isn't familiar with this indicator, basically it's a box that follows over price, and at the top you see how price rejected off of it. This was the high of the day. All right, price formed this high of the day, it pushed down, made this low over here, and then basically what I was expecting is that this liquidity grab was going to be the low, because when you think about it, this spike below structure coming back up, this could potentially be the lowest point. So when we're talking about day-to-day, you know, intraday trading, we don't know where the markets are going, but we know it's going to make a high and it's going to make a low. So the concept of liquidity grab is you're potentially catching that low before bullish volume comes in and pushes us back to the upside. So my entry was 0.5. Once again, I kind of got played by my own method right here. You know, I thought this was a liquidity grab. I entered on it, and then a liquidity grab got me. You see what I mean? So that's kind of what happened there, man. Like I said, if I would have been, you know, working with a one-on-one risk to reward, that would have been fine. My stop loss would have been down here, but that would have been fine. But you know, there's different benefits, there's different drawbacks, positives and negatives to every trading strategy. It's just kind of finding what works for you. You know, that self-discovery is really a major part of trading. But right here, man, for my final take profit, right, I had two options here for the final take profit. I could have went ahead and targeted the 618 level, which would have been basically 161.8% of this move, an extension to the upside. I could have targeted that, but I decided I wanted to target the 1.3200 psychological price level. So instead of me targeting right here at 1.3192, instead of targeting that level, I just wanted to target the psychological zone, because it was pretty likely, you know, a price was going to come into this area. We have no previous structure right here. I might as well target the psychological zone right here. So you can see that we perfectly wick targets, and I can even come over here and show you guys targets right here, 3,200. Then if we come back, wick 3,200 perfectly. So it's not the fact of being wrong on the analysis, but it's the fact of understanding what happens in between, because we were looking for the low of the day to be here, but we pushed down, then we followed through with it. So not really too much we could do right there, you know. Of course, if we had a wider stop, it would have been better, but like I said, it's just taking it day by day, because all it takes, you know, you might have lost 2% right here, but this was a 1 to 3.81. So metaphorically speaking, if the next trade setup you look at is a 1 to 4, you could be looking at like an 8% gain. You know what I mean? So all about, you know, take a loss for what it is, move forward, and you know, you got to go from each loss without losing enthusiasm. You got to keep pushing and just really remain level-headed through any type of drawdown and through anything like that. But that's pretty much it for USD CAD. This was a pretty simple setup, like I said, looking to buy on the pullback of that liquidity grab, because remember, man, we have retail movement in this market. A lot of things occurred due to kind of what we have going on right here, but basically USD CAD made this low so far today, and it's pushing back up. So that's pretty much it for UCAD. I'm gonna take you out of G. All right, man, so we're back here on GBP USD on the 1 hour time frame. My camera actually cut out, but we are back. Pretty much what I have here on the charts, right, these little vertical lines that are purple, this is session breaks. So basically I have it set up to where every 24 hours a vertical line is going to come down and separate price. And basically what this allows me to do is it allows me to see the overall price movement for the day. So if we didn't have this on the screen, you know, it's pretty hard to see where your highs and lows of each day is. So it's very beneficial, especially when you combine it with some of the methods I'm about to show y'all. So that's basically what that is. Since we're on a 1 hour time frame, it means that we're going to have 24 hourly candles play out in between each one. So you can kind of see how price reacts with the days. You can see how we were very bullish. We pulled back through the night, and then at the start of the day we took back off up again. But to start this off, let me go ahead and walk y'all through what actually occurred right here. So for the most part on GBP USD, we had a very consistent move to the downside, very consistent. pushing up, pushing down, pulling back, and then we finally made this level. And if I was to come over here and go ahead and go to bar replay and rewind the charts and act as if this move hasn't happened yet, let me go ahead and bring this back a little bit. You can see how we kind of topped out around this level. So this is going to be a highly liquid price. You know, above this level, we're going to have multiple types of retail orders. We're going to have people looking to sell this area and push price back to the downside. One reason for that is because you could draw a trend line right here, and you can see this is what many people see. Rejection, failing to make a new high. You're going to have people looking to draw Fibonacci to catch the retracement. Then you're also going to have buy stops. So basically, if someone wanted to see price push up here, you're going to have retail traders residing around this level, so that's also potential liquidity. And then you're going to have those stop losses of those retail sellers who are looking to sell around this area and push price to the downside. So it's really not the matter of not selling on the resistance, but just thinking about who is in the markets before you get into it. So right around this time, I probably wouldn't look to enter this. Definitely wouldn't look to enter this. I would kind of let it do its thing, because once again, now we're in a phase of consolidation. We're in a phase of potential contraction. So this is on a 1 hour time frame, right? The 15-minute might be showing consistent upside movement, but when you're on this 1 hour, we can see that we're kind of in this block here. So before we actually see moves initiated, I probably wouldn't look to enter this. But we know that this is a highly liquid price. Now, we don't know it yet, but we marked out the charts beforehand. But basically, we'll see right here that this is highly liquid. And what we have happen here is central banks do push price up, right? They control price. They know who's where. They push price up to this level. It goes through the computers. It goes through the algorithms. And basically, it stops those sellers out. And we can go ahead and measure this out. This is about 20 pips, a little bit over 20 pips. Stops those sellers out, activates those buy stops, and then we push back down. So what do we have happening here? We have price peaking to the upside. So at this point, we're going to have multiple possibilities. We might pull back and continue to the upside. Or another possibility is that we're just going to see price come back to the downside and test this level. So once price comes to test this level, you're going to have different options as well. We're either going to push back up off of this level. We're going to break, fake out, and come back up. Right? We're going to break, fake out, and come back up. Or we're just going to push to the downside, retest, and then continue this downward wave. So that's really the only possibilities we have right here. And what I would probably do is I just watch it accordingly. So if we go ahead and we press play, we can see that boom, price pushed all the way to the downside. And this is back to what we said, like in previous videos, you can see the same exact pattern set up. And I'll even go right here to my trade on GBP/JPY. I took, I guess, a little bit over a week ago. I'm gonna go ahead and show y'all really quick. Right here, very, very similar concept, right? Very similar concept. If we come over here, peaking above to the upside, peaking above to the downside. Pre-market, we had consolidation before this actually happened. Right here, consolidation, peak to the upside, peak to the downside, push up, pull back, follow through. Right? Very, very simple. Same thing occurring here, push up. Right here, sell liquidity grab, because around this point, we already know people are going to look to break and retest this. Some people, sell stops being activated. So there's liquidity there, and then we're pushing back to the upside. So this is a very similar concept to what I wanted to see happen here. But once again, man, nothing's going to work every time. Nothing's going to work every time. Even though social media, when you open up social media, everyone's posting profits. It kind of gets you, your subconscious mind and the routine of losses are a horrible thing. But losses are going to happen just like wins. And they're really going to happen. And the quicker you can understand a loss and understand that you're in control of the size of them, the better, the better off you'll be as a trader, because you'll be able to move on from it. Right? You'll be able to move on from it. So back right here, we're pushing back to the upside. So what I'll be doing around this point, right? We already know this is a liquidity grab. Central banks pushing price down, grabbing what they need to. So next, you want to look at this. Look at this. See this liquidity? You see this little mini area? I want to put, this level right here, and I want to see how it reacts to it. So you see how we wicked all the way above? You see how even if we draw this level, we wicked above this level? That's a good sign for me. So at this point, I already got my Fibonacci drawn, but I would be entering somewhere right here, right? So just in case, you guys want to see it visually, I would take Fibonacci down from this low and bring it all the way up to this wick, because this is where we wick to the upside, right? This is our swing low, this is our swing high, and then we're looking for a pullback into this region before a continuation to the upside. So why am I looking to go long here, right? The reason is because, once again, the liquidity grab. If I go back to the high low today, we can see that the The next 24-hour session here opened up, it pushes to the downside. So if I go to the high low day box, this is the current low of the day. So it's very possible price is going to push to the downside and make new lows. However, why is my stop loss so tight? This is the liquidity grab I'm looking for. Once I see this pullback, I don't want to see it come down anymore. Once I see this level being made, if price for any reason was to kind of trade back into this level, it's very unlikely it's going to become a double bottom just because of the way the structure is formed. You see what I mean? So at this point, man, 11 pip stop loss, 85 pip reward. Now you have multiple options when it comes to your take profits, because this is 11 pip stop loss. You can easily target this area, and this area is very conservative. It's very possible you'll hit this level, but if you want more long term, this is like sniper swing trading. This is 64 pip potential reward at the 618. Even if you want, this would be a less probable opportunity, but you could come back up to the highly liquid price and catch a potential double top, and that's actually what happens right here. But this is back to what I was saying about tight stop losses like this. You know, you might get stopped out, but when you understand the concept behind it, it's much better than just going with a tight stop loss because you like the look of a high risk to reward. You see what I mean? So go ahead and press play. So we're just looking for a pullback. Now you could have easily entered right here. But I already seen this setup play out, so I know it comes down and it touches the 618 retracement. That's where I would have entered. Once it came, you know, past the 786, that would be almost invalidated to me just because of the type of trade setup that I'm approaching, because this is the low of the day, this is the liquidity. We don't know if this is the low of the day, but that's what we're aiming for. You know, simple impulse correction, impulse based off of the fake out of retail selling money around this level. And you can see this was very, very clean. This was very, very clean. And then you have to see like rejection. A lot of traders are thinking this is the low of the day relative to this previous high. So you're just kind of taking one day at a time. And then one more thing I want you guys to see is this 24-hour session. You could have entered right there on the open of that, and then you would have pushed up, pulled back. This would have been a more conservative entry, better risk to reward, but not by much, you know, not by much. So if you press play, boom, played out on that. Perfect touch to the upside on this pair, and that would have been a very clean trade setup. So if I go ahead and I press play, and kind of let this market do its thing a little bit, I'll go ahead and fast forward it actually. I'm going to have to go ahead and rewind back to this level of price. We actually got one more setup I'm going to show you guys on, let's see where we at. I'm going to show you guys one more setup on GBP USD right here next to it. And then I'm going to go ahead and come over here and show you guys some of these other files I got, teach you guys a few more things. So that's what we got going on. We see price push to the downside. And what you want to do is you want to mark out this previous low, because this was a previous turning point. You see what I'm saying? So this level here, it didn't really hold up its structure in the past, but look at this previous high. From this level, we had enough strength to come up and make a new level of price. Right, so once we see that, we know that this level has some type of zone, because this is where the momentum started. You want to look at your turning points. So that's where the momentum started, and we came back, we dipped below. So if you are my student, you know, you're a member of the course, the bundle, you know how we would trade. This is very textbook, and you could have definitely got in right here and caught that move to the upside for about let's see, about 180, 170, depending on where you want to get out though, right? Because you're a day trader, scalper, swing trader, you could approach it from multiple directions. But that could have been high risk longs, I would say. You would have caught the low of the day right here on that retracement. And then very simple, we push back up, we simply break, retest, potential double top, and then we fake the low, and then we push back to the upside. And then from this level, you see what happened. We're back up to this highly liquid price where we previously had that double top format. So around this level, we induce a little bit of reaction, and this was equal highs. So what I have right here is selling attention. Selling attention, we're inducing reaction, and we're setting a potential order up. Now, remember, there probably won't be too many people looking to sell off that level until, you know, this structure right here is broken. So from this point, what we see is we see a new high that they made. What is this doing? This is pushing to the upside, and it's activating certain order types. I'm gonna go ahead and take my highs and lows off. But basically, we see this level, we see the push to the downside, we see the new highs made, and this is an IC candle, right? Institutional candle, whatever you want to call it. It's basically like a real big bullish engulfer and pushing us back in to these levels of structure here. So basically, after that occurs, we're back in the structure, we're back around this level, And we need to ask ourselves, you know, this fake out occurred. Is price going to respect this mini level of resistance? Well, you want to look at it as time goes on. You can see we begin to reject. No new lows are made yet. However, if you want to sell, keep in mind new highs are made. It makes sense that since buy stops were grabbed and we push back down, and since, you know, buyers are faked out, it's very possible that once we come back down to the structure, we could fake buyers out again and then go with the move. So this is kind of what I mean. Like, if you want to identify powerful turning points, you don't just want to look right here, but you also kind of want to look around these levels, like where are the fake outs at? You know, where are these moves happening that is trapping most retail traders? Because then you could use it as a clue. You know, what's the 90% doing? How can I build a high probability approach? Not necessarily do the opposite, but think in terms of kind of what we have going on here, right? So this is the candle formation. And then what you can do from this level, and I'm going to go ahead and clean up my charts, right? Let me go ahead and go to my settings. I'm going to take the session breaks off because that does make the charts look a little bit messy. But we see the fake out, and you could have took Fibonacci. And once again, I'm going to remove it. I'm going to do it again just for visual purposes. So you click Fibonacci from this high down to this low, right? This high down to this low. We see a push up to the 0.5, all right? Fake outs, buy stops, grabbed. See what we have going on here? Fake out, push the upside, buy stops, a grab, break and retest traders, a little bit of rejection, and we're coming back down to these lows. All right, grabbing a liquidity. See what I mean? So it's break and retest traders. They're taking out as well. Then we pull back and we retrace. We scoot back up, you know what I'm saying, consolidation, then boom, we're coming back up again. This is a deeper pullback, and then look where we're at. From this point, we're now near that 618. You could have went short. Unfortunately, I probably can't go down to the lower time frame. I won't be able to look at this from like the 5 minute or anything, just because very, very far in the past. I'm pretty sure TradingView don't have that data, man. But this is what we got. You know what I'm saying? Then another good thing is when you see a liquidity grab like this, see how this liquidity grab? Sometimes you could pretend this doesn't exist. Sometimes, right? It's really all gonna depend on the setup. It's real good to build a good overall foundation of knowledge with this, so you don't have to trade it the same way every single time. You can kind of go based off experience. But I realize a lot when there's a liquidity grab, you could treat this as new lows are being made from this level. You see what I mean? So then it could be a valid Fibonacci retracement. So that was your fake out, that was your push up. Then we rejected, then we kind of had this consolidation, and then we pushed back to the downside. So it's back to what I was saying about your tight stop losses. If price comes back to trade above this level where it previously had this liquidity grab, it's highly probable you're just going to see something like this occur, and we're going to continue up. So that's why my stop loss have been very tight. You could have either targeted 618, or you see this previous level where that turning point happened. You could have went crazy with it. You could have even targeted that for a 1 to 6.81 trade, and they happen. And one of the main things is it takes a lot of patience to hold a trade up to a 1 to 6. Speaking, you know, from experience, because a lot of times I've closed trades early and I missed out on very good moves, but you never really miss out. You know, you gain knowledge, you gain a better understanding of what you could have done, and you can only prepare for the future to get better. You know what I mean? So that's pretty much it for GU. I walked y'all through UCAD. GU, this is the trade we took. Pretty small loss, not really too worried about it. Fresh week, man. It's Friday right now. It's 9:33 a.m. New York session going on right now. But yeah, man, that's pretty much it. Let me go ahead and show y'all this as well, the Fibonacci. So this is the Fibonacci numbers. This is the Fibonacci numbers. So 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. This is the sequence. I had a few people, you know, ask me if I could make a YouTube video explaining Fibonacci, so I figured I'd hop on here as a part of this video. You know, this analysis, trade breakdown. I'm gonna explain to y'all the concept of it, because we all know what Fibonacci looks like, and I'm gonna get a free area on my chart. I'm gonna draw my Fibonacci like this. We all know what these numbers, we know what it looks like, you know, but I'm gonna show y'all what the numbers mean. So basically, when you start off, if you add 1 plus 2, it's gonna equal 3. If you add 3 plus 5, it's gonna equal 8. If you add 8 plus 13, it's gonna equal 21. So the concept, right? See how it says 1 plus 1? You're taking this previous number and you're adding it by the next. So 1 plus 1 equals 2, and then 2 plus that 1 equals 3, and then 3 plus that 2 equals 5. See what I'm saying? 5 plus 3 equals 8, and then you come back, right? So the 3 comes from the previous sum. 2 plus 1 equals 3, so then you're adding 3 plus 2 equals 5, right? So that's kind of how you want to approach that. I don't know if I'm confusing y'all with this, man. I don't know if I'm teaching this the best right now, but yeah, that's basically the way it works. And the thing about the Fibonacci numbers is the more you go along with the sequence, the more the number becomes more in alignment with 618. So if you come over here and you divide 89 by 55, 89 divided by 55, 1.618. And basically the further you go down the line, so you see how we have 89 plus 55 equals 144, like right here, like as example, 13 plus 8 equals 21. You're then taking that 21, adding it by 13. All right, so that equals 34. So then you go on 34 plus 21. So you're taking that previous number, and the more you consistently do it, you could do it as many times you want. As long as you could count, you can continuously do it on a sheet of paper. And the more you do it, the more precise it comes with the number 1.618. And then if you come right here, I got another little thing for y'all. Relationship between the Fibonacci sequence and the golden ratio. Fibonacci sequence is an infinite sequence, which means it goes on forever and ever. As it develops, the consecutive term becomes closer to 1.618. For example, to find it, it's a little formula. We ain't got to get into all that, but that's all. That's what I got, man. That's what I got. So basically, you know, if we're pulling back, this is looking, you know, at that ratio. We're looking for 61.8% of a move. So if price was to push down this far and I was to bring Fibonacci from the top to the bottom, right, when price pulls back, if it pulls back up to 0.5, this means 50%. So if I take this move and I look at this move is 50% of the orange line. See what I'm saying? So once we push up a little bit more, if we were to push up a little bit more, that means we've now moved up, not 50%. Hold up, let me go ahead and clear some of this off real quick. Yeah, so that means we didn't move up 50%, but now we moved up 61.8%. And the theory is that since numbers, and trading is a numbers game, it's data, since trading is numbers, the theory is that 61.8%, just like the Fibonacci sequence, is very powerful. Right, so that's the concept of it. That's a little breakdown of it. I'm not gonna go too much into it. A lot of people believe it's like a universal thing, like a lot of measurements and plants and stuff are supposed to align with it. But I like it for trading, man. It works for me. So that's just kind of my little breakdown on it, man. I hope y'all enjoyed this video. Hope y'all got some value from it. I've been dropping a lot of course content lately, like a real lot. Just been stacking up on my computer. Getting this information just saved. I'm revamping my whole course soon, so if you guys are interested in that, feel free to hit the link down below. And I also have this free Telegram right here, which will be a link down below as well, and I'll be sending out free analysis to pretty much anyone, and it'll just be chart markups. It won't be, maybe I'll send signals as well every now and then, but it'll mainly be chart markups, and then we have a bunch of entries. So this is free. Aside from the free one, I will have my VIP alert room next to it in the description as well. And then this is our Discord, but I got it in Telegram now, man. So that's pretty much it. I hope y'all enjoyed this video. Hope y'all got some value from it. Comment any questions. If you disagree with something I said, hey, comment it. I'm willing to. You can never feel like you know it all. I'm willing to learn from anybody. You know, you never know who you can learn from. So if you disagree with it, give me your point of view. I'll see about it, and we could get better, man. That's what this is for. Just trying to spread the platform, trying to help everybody get better, putting out free education, man. So that's pretty much it. It's me, your boy BG. Leave a like on this video, subscribe. Like I said, if you're interested in VIP, you're interested in learning the way I trade, more detail than this, because I don't have these concepts on my course yet. You know, I've held it back for a while, but I figured I'll come out. I want to put my students onto it. I want to put my students onto this method. And yeah, a lot of that's going to be on my course. I'm going to go real in depth. These YouTube videos are pretty surface level. I talk about liquidity grabs, candle confirmations, and fake outs. But in the course, I'm going to have a lot of special things coming very soon. So like I said, if you want to follow my trades, you want to learn the way I trade, I do signals, all that, I got the link down below, man. Hope y'all enjoyed this video. I'm out. Salute.